Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia. And today, this session is done in collaboration with Maybank Investment Bank. And I'm sure for all of you who have already invested in the stock market, you may be wondering, are we actually in a bear market? Because the market looks like very volatile. A lot of great stocks have been sold at discounted prices. So and you're probably unsure whether you should invest now or hold off to those stocks that you have been monitoring. So I'm glad that you tuned in today so that you can get great in-depth insights from our Maybank Investment Bank's senior chartist today as we discuss the current trends and opportunities in the stock market. So welcome everybody. So my name is Shen Chu. I'm the moderator for this session. So if I may briefly introduce our honorable speaker today, and he is none other than Mr. Nik Ihsan Raja Abdullah. So Nik is a CFTE, is a senior chartist for research Maybank Investment Bank Berhad. He's responsible for generating technical ideas for both retail and institutional clients. Under his coverage are equities, derivatives, and commodities in Malaysia, Singapore, Philippines, Hong Kong, and the US market. He is the former president of Malaysian Association of Technical Analysts, MATA, and he's also the youngest board of directors for International Federation of Technical Analysts, IFTA. So welcome to this session, Nik.
Thank you, Shane. Thank you very much.
Very honored to have you here to share with us.
No, it is my honor. Thank you.
Yeah, I know that you're going to share with us the global market outlook, technical outlook, and zoom into Asia and also Bursa Malaysia outlook and point to us where are the investment opportunities in today's session. All right, so without further ado, let me hand over the session to you.
All right, thank you very much, Shane. First of all, thank you, Bursa Malaysia. Thank you, Shane from Lysian. Thank you everyone for joining for today's session. My name is Nik Ihsan. I think some of you are familiar what we're going to do today. For those who are not familiar, today there won't be any slide. I'm just going to open the chart. I'm going to show you where the direction will be, support, resistance, the risk, the challenge, the momentum, the velocity of the 5 movement, and so on. And I also going to highlight from index in the US market. We're going to visit some of the key index in Asia before we zoom into Malaysia equity market. And when we going through the list of the sector in Malaysia, which actually sector are doing well and expected to be well, and expected going to be have some correction. And beyond that, we're going to open the floor for you to ask any particular stock that I'm going to do what we call that on the spot analysis for you guys. So I'm going to highlight support system and so on. So my background is actually pretty much technical, and today we'll cover pretty much on the technical analysis perspective. I've been doing technical since 2007. I think it has been quite some time. There's a lot of journey. I learned quite a number of the unique techniques here, pretty much journey system and so on. But right now, I'm going to highlight you from the what we call it something to be much more similar. We don't have to use so-called complex technical analysis to do analysis. You just want to find so-called a conviction particular move, and that's going to help to spot any particular opportunity in the market. Now I'm going to share with you my screen. All right, you should be able to see what we call that icon Reuters here. This is what we call the S&P 500 chart overlaid with 3 moving average, 20, 50, and 200-day moving average, green, blue, and red color. On the top, I have RSI, simple RSI, combined with 2 moving average to spot so-called the momentum. And at the bottom panel here, you will saw a VIX index. Okay, VIX index is actually a so-called fear index. Has been tracked looking for the volatility in the market. So generally, VIX index has so-called an inverse relation with S&P 500 index. That means if VIX goes up, S&P goes down, and if the VIX goes down, S&P goes up. right? Now, the chart that you saw on the screen is the similar chart that I have been put in my report, regional traders almanac last month, sorry, 2 Mondays ago. So what we did actually highlight where we expect the market will move. Now, if you look on the what we call that long term, the trend is pretty much something that we call a circular bull has pretty much has ended. The circular bull that start from the low of the March 2020 goes up all the way up toward 4,800 region, and then you can see here the trend has broken below the 200-day moving average. Granted, it retests again, I think briefly this year, but again, there's no so-called kind of sustained charge, and you can see the index has again breaking below the 200-day moving average again. Now, the important part right now is how the volatility index has been reacting. Now, it is one of the key what we call that tool to spot bottom in the market, whereas you use a VIX to seek where the VIX index going to spike, and if you saw a reversal signal in VIX index, there is a pretty much chance that the S&P 500 going to continue the uptrend again. Now, if you look at the VIX here, there are quite very interesting reading. The first one, the VIX index since January last year, 2021, has been struggling to go beyond 37 point, right? So this has been creating so-called resistance zone. Every time they hit what we call that 37 point, yes, is okay, but the volatility, all right, for the past few months has been generally much more stronger compared than last year. If you look from the period from April up until November last year, VIX has been averaging within 20 point, which means pretty much normal. If you've been trading option, 20 is pretty much a relaxed kind of environment. So when the VIX start to spike, trading sub 25 point, 30 point, volatility is much more higher. Now, the reason why I highlight this because while despite we have so-called major concern about the ongoing war between Russia and Ukraine, the inflation, the rising interest rate kind of environment, all right, the commodity super cycle rally and so on. The VIX index, however, if you take a look, the volatility has been a little bit more what we call that weaker. You can see there is a multiple rejection over the past few months, and even the recent peak within 36 point here, you can see south of the, what we call that rejection, and because of that, you can see the VIX has been eased lower, below 30 point. So in those reaction, you can take a look. There are also what we call that a decent reaction in S&P 500. So because of that, you can see there is quite possibly a reversal signal. So in the past 4 candle for S&P 500 index, you can take a look. There is actually a variation of the so-called Morningstar pattern. Morningstar is a candlestick pattern, whereas when you saw it, there is most likely to signal there is something that we call a bullish reversal. That means there are decent chance for the index to stage a rebound. So I do think with combination with others indicator, as you can see here, the RSI has been trending up, riding above so-called the short-term moving average, but still pretty much below the long-term moving average. That means you can see also so-called a divergent. A divergent means while the RSI creating a higher low structure, but the index creating lower structure. So that means this kind of what we call that jerk off, or kind of what we call that sell off earlier, has been, in terms of the intensity, this has been far more weaker compared to the previous cycle. So because of that, there are decent chance for the index to stage technical rebound. So I do think what we call it, the equity market right now at least could have some sort of relief rally. Now, next part where that's going to be what we call that a concern. The key resistance now lies within 4,300 toward 4,400. So that's for S&P 500. That means inability for the index to go beyond that level. I mean, the put so-called the current rally will be pretty much on the what we call that short term. Okay, in order for the market to shift from the current short-term correction toward continuation of the long-term uptrend movement, they need to trade above 4,300. So that means if there any rally coming for the next few weeks or months ahead, okay, be sure to be on the lookout, particularly when this index revisiting this so-called critical resistance again. So because of that, I do think any rejection within this particular zone could actually prolong the ongoing correction, and there is a decent chance for the index to revisit the low at 3,800, and if those broken, the next support level is quite far off, particularly at 3,200. All right, so really very good, provide two things. One, a short-term opportunity for us to trade. A second, a long-term opportunity for us to, if you saw any rejection movement within this particular zone, that means it give us some chance for us to sell on strength. So that's for US market. Now, interestingly, when you saw the current volatility globally, if you zoom out from the US market and relook certain index in the Asia, there are so-called, I would say, thing has been bad for quite some time, but a certain index or certain market in Asia has showcased some sort of resilience, all right, particularly our market. And I think if you take a look here, let me open up Hang Seng Index right now. I'm going to switch over to the weekly chart. Okay, so this is a very interesting, because I do think for Hang Seng, Hong Kong stock in general has tested somewhat something that we call a major key support level. All right, so if I just draw a simple Fibonacci zone, you can take a look here. There's a plenty of the support, okay, being created within this particular zone. This zone has been tested at least 1, 2, 3, 4, 5, 6, 7 times over the past 12 years. So because of that, there's a decent chance for this level to be able to absorb remaining selling pressure. So the Hang Seng has been so-called a decline since last year, whereas the other market goes up, Hang Seng has come down. But interestingly, if you can see the reaction recently, this level has been tested earlier on a March, whereas we have some sort of rebound and retested again, I think last week. Now, the problem right now is where you can see here, the rejection that come in last week has not that strong. In fact, there is a so-called interest start to come in here. By the shape of the candlestick pattern over here, you can, the interest of buying start to pouring in. So all the selling pressure has been, pretty much well absorbed. So because of that, I think, in general, Hang Seng right now looking at Hong Kong stock now looking much more attractive compared than before. Granted, the trend is still pretty much down, but if I just overlay with this, I think there could be a divergent. Oh no, there's no divergent. There's not much divergent, but the momentum is pretty much building up right now. So yeah, there is a divergent. It's quite small actually. Here, lower high structure, high low structure on the right side over here. So short term looking quite promising, providing they can take out the 50-day moving average over here, by the blue line here. That means 21,250 is your significant key resistance level. Whereas if the index capable to break this particular level, creating a new base below this level, that means there is a decent chance for further recovery ahead for Hang Seng. Now, zoom out toward what we call that Asia in general. Asia in general, this one of the index that I've been keep highlighting in my report called FTSE Asian 40 Index, highlighting top 40 stock, biggest 40 stock in Asian. Now, if you look at what we call that the trend structure in general, is pretty much bullish. All right. Now, if you overlay with the moving average, it looked like a little bit what we call that off, because the trend has been, have been declining below the 200-day moving average, and right now is approaching the key support level. So I think, in a nutshell, if you want to track this index, you have to look for the component, which are the biggest components. So most of the biggest component come from the banking stock, particularly from Singapore, and selective big cap in Malaysia. So despite so-called looking a little bit weak I do think the downside risk could be capped, particularly when you see there's a plenty of support trading within 9,900 and 9,700. So I think we are waiting for the stronger reversal signal. And if you look on the momentum here, it has been tested twice, the oversold territory. Okay, every time it has tested this level, okay, often you can see the market has been recovering as well. All right, now, Fang stock. Yeah, sure. I can make. If you have time, we can take a look. For now, let's relook what we call that. Some what we call that commodity market. Now, I think one of the so-called the strongest factor right now is about dollar. So dollar index, I think, is pretty much critical for us to determine the direction in order for us the view, whereas the other asset class are going to move. For example, if the dollars goes up, often we follow by the decline in the commodity. However, over the past few months, you can see commodity also in the super cycle, because of the limited supply, post-COVID creation, and so on. But either way, none of these assets are going to goes up together forever. Only one will goes up, one will come down. So that's often what happened. Something that we call intermarket relation. There is a lagging between some of them, but beyond that, often they will trading in the inversely. Now, let's take a look dollar index. So dollar index in general has been generally very, very strong. If you look on the long-term trend here, short-term trend, here, the trend since over the past 5 years is pretty much on on the upside. Now, something that very interesting occur here, because if you draw a simple Fibonacci on top to the bottom here, the dollar is actually pretty much trading within the key resistance level. Now, this is a critical level. Whereas if the dollar able to take out my resistance within at 107 here, which is considering within 72% area drill line, is actually a different variation of the Fibonacci. Now, this going to be my critical resistance at 107, because if the dollar capable to break beyond this level, I think the more upside we're going to look for the dollar could trade goes up beyond 110 or perhaps 120. That's something which pretty much possible with the ongoing interest rate high and so on. But regardless, the reaction for the dollar over the past few days has been little bit eased. You can see here the dollar start to decline, but this is still pretty much considered a pullback movement. So there's not a major correction yet. For now, if you combine with the so-called other indicator, you can see here there's what we call a bearish, so-called bearish divergence already. So this could actually signal the dollar could trade much more lower. Really give us some sort of the relief rally in the other currency, particularly for us, USD, MR, which is a ringgit. Ringgit has been trading at 439. I think the upside potentially to be kept at what we call that 440, which is our major resistance zone. Now, quick look on what we call the oil before we look on the CPO and gold. So on the oil market, this is very interesting. Oil market, earlier, my expectation, I believe that Brent is actually in the final rally, whereas they are showcasing something called expanding diagonal kind of pattern, often happen on the wave 5. However, with the recent peak at the price at 139 over here, that give us a so-called we call that a new kind of information that allow us to revisit or reassess the particular trend in for the oil. Now, my view for the oil, there are key and major concern for oil. One, when you saw this kind of pattern, they are moving kind of triangle. So often triangle has been generating or being created or being forming within the waveform. So in other words, if you learn something called Elliott wave, okay, there is a 5 kind of wave. Often this pattern occurs within wave 4, which is the last, final correction move before a final trust or final rally. But for now, it is being quite tricky, because you can see here, this so-called resistance at 140 is considered quite strong kind of resistance. So you look back on the bigger time frame here, weekly chart, you can see here there's a plenty of massive kind of resistance occur with this zone. So I do believe the upside for the oil right now, it could be kept, particularly at the recent high at 140. So current so-called consolidation look like momentum has started to easing out higher, and this could potentially lead for the brand to revisit the resistance, particularly at 120. So now this $120 will become your key and strong resistance zone, which means if this zone has been taken out, I mean there is a more likely for the trend to continue beyond the recent high. For now, I think you need to watch out for another. That's the reason why you can see here the stock, some of the stock that we have been recommending so far, like hibiscus, has been trending quite strongly. Now, that's for oil. So for oil, my expectation, the upside could be capped, and eventually it could ease toward what we call that within 90 to 95 US dollar. So that's what we call that my expectation for the oil. Now, if you now this is interesting because I'm going to highlight this asset class CPU. Now, because we have been very bullish in the plantation sector for quite some time, largely when the CPU has been trading above 7,000. Now, here's the kicker, because I do think the current rally for CPU is actually at the tail end. And in fact, right now, just started and creating so-called a new correction movement. So you can take a look here in terms of the overall trend is still pretty much uptrend. However, the recent reaction, particularly in during March high and May here, has formed in something that we call a double top pattern. Okay, a double top pattern, in order for us to validate that kind of pattern, they need to break a certain line. So those line, we call this a neckline. So for this pattern, to be validated, they need to break this level. Okay, so that means 5,600 will be a confirmation of this pattern. Granted, while the pattern stay ongoing, I do think because of this nature, and when we combine cross-check within multiple so-called time frame, you can take a look here. The reaction has not been, positive. Even the correlation between the price reaction over here and the volume can tell you a lot. For one, the volume has peaked within the reaction over here, and this is happening on weekly chart. You can see there's a multiple rejection for 2 consecutive weeks on the back of higher trading volume. Now, the subsequent pullback followed by another rally has been, a little bit on the flat, particularly on the recovery kind of the trading volume. Because of that, those rally, and you saw in the shape of this, have this shape of the momentum, trading volume. That means the buying interest is not as strong as before. And then that's all true, particularly when the CPU peak higher, the volume not even can break the previous high of the volume. So that tells us that the buying interest is much more weaker compared than before. So the subsequent week has dragged the index, dragged the CPU lower, and followed by this week gap down. Of course, the gap down largely due to the contract rollover and so on. But because of that, that give some telling that the correction has just started. So I do think CPU rally has ended, and we could see further correction. That means later we're going to revisit plantation index to see how it goes. Is there any particular continuation of the rally, or should we take a handbrake and decide this is time for also take some profit? All right, now that's for CPU. So let me, in summary, you can see here most of the commodity look repeat. Okay, as the there could be a few more round of the rebound and so on, because the dollar start to ease. So I think in general, I think the commodity should start the correction again. So even gold, if gold price, you can expect some rebound recently, but the rebound signal has not been that kind of strong. This is just forming what we call that a Harami pattern. Harami pattern, despite has been validated, there's not enough what we call that momentum to push it higher. But regardless, I think there could be a possible rebound following the dollar as look like a little bit, on the pullback. So stronger pullback on dollar could lift gold slightly higher, at least in the near term. Now, I'm going to open what we call it, bring back the chart to the KSI in general. Now, one of the most resilient market in Asia has been our market, okay, Malaysia in general. Now, if you recall, during pandemic, all right, one of the strong benefits, strong stock that going to push our index higher, largely due to what we call that um, glove stock, okay, has been, one of the stock that going to keep index higher. But as the glove stock has started to ease, and you can see here, that's good. The what we call the index is pretty much on the sideways basis of the past 2 years. So one word we can call is defensive. Another word we can call it also is still pretty much on the neutral. That means any recent rally has been kept, particularly within 1610 region. So I think that resistance continue to be our strong resistance for now. But any downside pullback, I think, could be kept. One, because our financial index or banking stock look quite strong. One, I think the downside could be kept, and pretty much we can see here there's a recovery in the utility and also telco. That never mind. I'm going to open up chart later. But for now, because of that, I think the downside for KCI could be kept. All right. We are defensive kind of nature. So even the other market has been, quite volatile. I think we are doing quite okay. Particularly, we be quite some sort of the support within 1480. So long term, I do think there is a possible for the index to trade much higher, but 1610 need to take out first. So in order to take out 1610, they need to have a strong catalyst. We have a reopening team recovery play, but that couldn't bring us beyond 1610 for now. All right, perhaps maybe we have what we call that waiting for a stronger catalyst to lift the index pretty much more higher. But of course, for the we call that in general for retail investor, I don't think big cap is one of your major concern. I think this index going to reflect more your what we call that trading equity rather than the big cap. This is FDM small cap. Representing most of the small cap stock in Malaysia. The good thing with the small cap index, it has been in the rally for quite some time before they enter a series of sideways kind of movement. Now the good thing is the support is pretty much strong. It has been tested. At least you can see here 1, 2, 3, 4, 5, 6, 7, at least 7 times over the past 12 months. 18 months. So that means this support quite strong. So the recent setback or the recent correction that occur, you can see here the reaction for the correction for the small cap index has been completed. So I do think you can see here drop down, hitting the 61.8, and then stage what we call it, a reversal movement. This is the classic Harami pattern followed by a bullish candle today. So if you combine two, three candlesticks here, then may look like a piercing kind of pattern. So because of that, okay, if today's market small cap ended slightly higher, there's a decent chance for the recovery, or the uptrend should be continuing on small cap. So that means things look much more promising, at least in the near term. So on the I think currently most of the small cap are already on correction. So some small cap start to rebound. I think those rebound give you a signal that could be a reversal. And I think for the next few days or weeks ahead, I think this is quite going to be a very attractive time for us to reaccumulate the stock, which particularly trading at the support. Now, last but not least would be the ACE market. ACE market is pretty much on a decline. I tried to look across multiple time frames to see whether there is a so-called reversal signal or not. We've seen one, I think, in April, but the recovery, you can see here, is not that strong enough to take up the recent high. So perhaps right now, you can expect if there any higher low structure being created in the ACE market, that means the ACE market could actually continue to recover further. Now, let's take a look what actually which sector that we should focus on. So, should we visit the most hot sector first, which means I think tech has been in the correction for quite some time. So whether what you want to know whether it is good time for us to buy a tech stock or not. Now, I have been highlighting some of this chart in my Facebook actually, because we have quite a conflicting view. One, if you look on the weekly chart, you can see here this is a classic head and shoulder pattern being formed in progress. However, if you look on the smaller time frame daily chart, you can see here there is a something called also an inverted head and shoulder we made. So we have an equal fight between bull and bear within a different time frame. So the reaction for now, I think recent kind of movement, rather than focusing the inverted head and shoulder, I think the index has now moved into something look like a double bottom kind of movement. All right. So within the reaction of Nasdaq, I think Nasdaq also look like appear to be a rebound. So I think the most of the tech stock looking quite attractive at the current level. Okay. However, bear in mind most of the fundamental of the stock has been revised down. That means from the upper target, something much more higher previously has been revised much more lower. So that means the rally here, while it could have a rally, the upside again could be kept. If I overlay here with a simple technical tool, you can take a look here. The trend has been pretty much broken, the uptrend, because this index right now has been trading way below 200 moving average, has been confirmed by multiple death cross signal, and right now is strictly on the downtrend, right? So what we expect here is actually a so-called technical rebound. Hopefully, this rebound we able to take out few of the resistance and turning the so-called the index into an uptrend again. So one of the short-term resistance that I'm looking to revisit will be at 74 point. So 74 is quite critical because one, you have a 50-day moving average over here, all right? And also you have a one big candle over here to be taken out. So that means once the index been trading above here, building a new base, then it is much more safer for us to turning more bullish, at least in on the short term bigger time frame. Now, for now, I think you can take some what we call that bargain hunting, particularly on the tech stock. When you saw this kind of reversal signal, it could retesting again this support. That means if the stock, okay, if the index goes up but unable to have so-called recovery beyond the 20-day moving average, re-challenging the support level. If this support level broken, that means your risk will be pretty much contained within this particular move. So that means as we start to think to accumulate within the support level, your risk is pretty much going to be limited compare buying at a much more higher level. So while you can take some risk over here, be sure to be on lookout if the stock or index fail to break even the simple 20-day moving average. Then I think the rebound most likely going to be very short. For now, I think you can continue to observe better there. Now, quick look on the construction. Construction has been doing quite well. If you look on the index in general, I think it's fair to say that I do think construction should be correction. The recent correction could be at the tail end. One, you can see the reaction over here. There could be a rebound within 50-day and 200-day moving average. There's plenty of support. And I think the downside, I think this is a normal, we call that pennant pattern kind of formation because it just take about 4 weeks over here. We still can call it pennant. If anything more than 2 months, then we can't call it pennant. Pennant is actually a short-term, what we call that correction kind of the pattern, which is often followed by what we call that an uptrend afterward. So that means an uptrend taking a short break, forming a pennant pattern before eventually going up again. So I think construction has a decent chance to continue to trade higher, at least in the term. Consumer still pretty much stuck within the resistance at 200-day moving average. You can see there's some rebound that happened. Some sort like Padini and so on, but is struggling to go beyond this resistance. Resistance appear to be strong, so consumers still a little bit weak. Energy doing quite well, and in fact too well after they just take out the recent high over here. I think there's number of the stock that we are recommend much more earlier, something like Delium, Petra Energy has hit target pullback, and now even I think hibiscus in general doing very very well. We've been highlighting some trading at 80 cent, now trading about 126 over cent. I think we already give multiple buy for hibiscus. Let's revisit if hibiscus have more upside now. But for now, the energy, if again remember today's this is only half day. I mean the candle is not yet complete. If today somehow at 4:30 at 5 is off and ended lower, that means forming a classic shooting star, then they're not going to be very very well. So that means while this candle looking what we call that very attractive, is not complete yet. So we have to wait out at least another half day to see how what we call that the index being closing. So if this close at this current level, and the prospect for energy stock look much more promising. Is that way to know how high is high for hibiscus? No worry. Let me open up the chart for hibiscus, and we're going to take a look. Now, let's take a look on the finance. Finance has been some pullback. I think some stock quite similar in the pattern, something like CIMB, Public Bank, and so on. But regardless, I think the banking stock still pretty much trending higher. It could be some setback over here, but generally still doing well. With the expectation that are more what we call the interest rate high, that going to be much more favorable to the banking stock. That's you can see why the financial index remain trading on the upside. Okay, healthcare. Now this is tricky. Healthcare has been on the downtrend for quite some time. I think there is a multiple occasion whereas the index has been forming a double bottom pattern, but it's not been materialized. I think the reason will be in the December and January, and again they've been creating another double bottom pattern. Now, for healthcare, the only thing I could say, I think safer option for us to be bullish for the healthcare is only when the index been trading certain above certain moving average. So if you can take a look here, the blue line is actually the 50-day moving average, and the 50-day moving average has given quite fair we call that a premature kind of signal. So if you want to change it, so let's just change it. So let me just add in a simple moving average. Sorry, wrong one. Okay, indicator. Okay, let's just a simple movie average over here. Just now, instead of sorry, 50, let's just use 80. Let's see how it reaction. So 80, is there any false signal minimum? I think right now, for us to turn strong bullish for the what we call the healthcare stock, they need to break above the 80-day moving average at least. So not only break, they a new baseline, and eventually you have a new high structure, something like that, or 1 to 3 pattern off this line, then thing going to be much more promising. Granted, if you buy at those level, it's a little bit too late. But if you want to take some what we call a risk at the current level, the risk appear to be on the high side because still the trend is still pretty much on downtrend. So whereas you want to take much more calculated risk when the trend structure has turned much more positive or favorable, or you want to take risk trading at the ground. For me, I think it is better to wait for much more concrete buy signal rather than jump in the moment we saw just a glimpse, a little bit of the bullish signal. For now, I think it is better to wait for the stronger structure because you still have few other sector that are looking quite promising right now. Industrial product has been trading in the sideways despite trading below moving average over here. Let me just go back. Okay, despite trading below 200 moving average much earlier, but you can see it's still pretty much on sideways. Now, this is interesting. Plantation. Now, plantation stock has been trading. For me, I do think the upside could be kept for plantation. One, you've seen some quite big or large kind of the bearish divergent kind of signal. For one, you can see here, yep, lower high structure for RSI, high low structure for index, low high structure for D trend. So that means you can D trend is the indicator to track a small cycle with a bigger cycle, and you can see here the current up cycle is much more smaller compared to the recent cycle. That means the intensity, this trend here compared this year has been ease off a little bit lesser. So because of that, because of this diverging signal, I think any rebound could be kept, particularly when you saw multiple candle here, which is quite strong kind of bearish candle. So any upside I think to be kept, and I think the correction has could be started for the plantation. That means by completed it could actually trade much lower and testing the lower support at 7,500 at least. Okay, property stock pretty much on the support level. If you're keen on the property stock with the high interest rate, I think expected and can be a little bit challenging. But regardless, I think if you keen some stock big cap trading at the support, I think that could be your key. Risk doing quite well, particularly in a higher interest rate environment. You can see there is a new higher low structure. Tech stock we highlight just now. Telco also trading at the support level. Transportation is actually on the uptrend. If there is a high low structure, I think it could continue to go up. But if they fail to break 890, I think that could be immediate resistance. Utility also start to turn much more positive. It has been quite in the decline for quite some time. This is a decline, downtrend line, but this line has been broken. They just create a new higher low structure. Okay, so that means here it's turning much more positive. And you can see the momentum has started to pull up, from here. I mean, the RSI has started, rising above the 2-moving average. That means momentum is strong. The D trend also creating a new upcycle signal. So some of the utility stock may want to relook again. All right. Okay. Now, let me address a few questions before I pass back to Shane. Shane, some of the stock here, I think question would be hibiscus. Let me highlight quickly on hibiscus before I pass over to you. Yeah, hibiscus has been recommended by Maybank research. Okay, fundamental. I think we target price over 170 cents. Technically, we also been highlighting quite some time. So how to look how high it can go? So one way you can use is actually using the Fibonacci, or use back, or we call that as far as possible your data. So you can draw Fibonacci level over here. So if I just revise a little bit, put 50 over here, and there you go. So right now they just passed 50. That's one of the biggest Fibonacci retracement level that we can draw on the hibiscus. However, if you come back on the smaller here, you can draw a simple Fibonacci 2 over here. Okay, and then you do an extension of that. So extension level often at 1.23682. This is pretty much a common level of extension. So often, in my experience, often what we call it, every time the stock hit level at 161.8, there could be some setback, correction before continue. Some stock, if the trend too strong, it can go all the way up. Now, I think for when we draw what we call that Fibonacci's now, we come across something that we call something that we call a confluent level. That means at 61 point over here for the bigger cycle of the Fibonacci also has been coincident with the 200% of Fibonacci extension over here. So because of that, I think the next strong resistance will be at 1.70 cents. So this will be a major resistance for the hibiscus. Okay, so that's what we call how we can use the technical to look for the next upper cycle or the resistance for the stock. Now, to summarize, in general, I would say globally, the market stay looking a little bit shaky. The long-term trend has been broken, but we could expect seeing certain, at least the relief rally in the near term. So by and large, if the relief rally can morph into a stronger baseline, that means we could see further recovery. I mean, it is possible for the trend to continue. So I just highlight you a few of the key level, particularly S&P at 4,300. So coming back to the Malaysia, I think we are waiting for the stronger catalyst before the market can go beyond 1,610. So I think that's pretty much it for short term. Small cap index looking positive. East market also you can see little bit of the rebound signal, and generally most of the sector trading in the sideways, except you like energy, construction, tech stock could actually stage a rebound. Plantation could have a correction. Telco and the wedding trading at the support. Utility also looking quite promising. So in the nutshell, I think commodity rally could ease off. Dollar could be continues to trade much more higher. But beyond that, at least in the short term, there's still pretty much plenty of opportunity for us to look at, particularly in our market here. All right, back to you, Shane.
All right, thank you so much, Nick, for the very insightful session with us on the technical outlook for the indices, be it in the US, in Asia, as well as in Bursa Malaysia. So if you have any questions for our speaker today, you may write them in the Q&A box, not the chat box, so we can easily manage your question. Of course, in the Q&A, we will only take technical analysis related questions. All right, so we won't address any fundamental related questions. Will you be able to dissect the chart of MFLA?
MFLA, all right, really.
Yeah.
Let me take a look. There's just quick, there's some of the chat here. I'm reading something here. For retail investor, where you can find Maybank research report. Okay, I think my colleague here will help you to give you a link for our Telegram channel group where you can access that from that. For full report, however, only available to client. And if you want, you can get access from our trading apps actually. My colleague will actually put a link for the Telegram group. You can subscribe our newsletter from that. All right, so let's take a look at MFLA. All right, so let me take a look on a bigger time frame structure first. Weekly chart looking okay. Just draw a simple figure here to know whether whether the ongoing ongoing correction has ended or not. So yeah, I tested at least twice over here. So we see trading within support, momentum start to picking up, particularly on the weekly chart. Back to the small time frame, daily chart look quite promising. I think it's still pretty much on the sideways. All right, but the today's gap up could signal the stock trying to push beyond 69 cents. I think we did highlight stock much more earlier. So as long I think this low remain intact, I think there's a decent chance for the stock to be trading much more higher. So M4, I think if I draw a simple trend line over here, it looked like promising. Okay, so that's consider a mild breakout over here. You can see here create a return move and now rebound. So this is a classic 1, 2, 3 pattern. So we need this pattern to complete by breaking above 69 cents. So by the time we break 69 cents, that means the trend could be confirmed as changing from downtrend into uptrend. So that's for M4. Another one, Shane, I think which stock? Sorry.
All right. The next question will be on DNEX.
DNEX. All right, DNEX. DNEX is one of my favorite stocks. However, recently there has been a strong so-called a pullback. So let me redraw again for you. Now, one, I think DNEX quite promising because this stock has been so-called this one sideways for quite some time before you have an positive kind of rally. So because this time we have been recommending for quite a number of time, eventually goes up, hit our target, now in a pullback. We've also been recommending again within this candle. So right now for us, I do think the upside for the DNEX is still pretty much there. Trend still pretty much on the upside. Any pullback here, I think could be kept. Recently, my expectation, the downside is going to be kept within at 1 ringgit. However, it's just broken through. But subsequent, okay, you can take a look here. The volume is quite high, but the subsequent recovery also equally on the high volume. So that tells us that the demand start to coming back again. So if you use a simple moving average over here, you can see here the stock has trying to go up beyond multiple moving average. So right now, because of this nature, sideways nature over the past few months, that means using what we call that moving average, can be a little bit tricky. So you can keep it simple. Just look for the momentum. Momentum here, I think, look quite promising. We just draw a simple trend line here on RSI. There you go. You can take a look here. Is in fact, okay, if today's market close a little bit on the high side, 104, 105, that means we have a solid breakout on momentum. That means this stock should be looking much more promising. So DNet is actually one of our favorite stock. We highlight quite a number of times. I think with this current setup, look quite promising. It should be trending higher, and the next resistance, immediate resistance, should be within at 115, 115, 116. That offer you at least 10% upside from the current level, at least.
All right.
Okay.
Are you able to look at Samcam?
Sorry?
Samcam.
Oh. Okay, I'm going to start with the plain. Nothing, no indicator, just price and volume. All right. The structure, trend here, not promising. So the uptrend here, while it looked pretty much decent, there could be plenty of rejection, particularly within this zone. So there's a plenty of selling pressure happen within 95 cents up to 105. So that's the level that we should be more careful of. Short term, okay, short term, you can see here the trend structure has been, pretty much okay. New higher low structure being formed here, and this level have been tested at least 3 times since I think early of the year. So right now you are pretty much trading within the support level. Now let's take a look whether there is enough momentum to lift the stock higher or not. The D trend signal still pretty much negative territory. Okay. Although trading within the support level, it has not turning on upward yet. So that means by the time the D trend goes up beyond 0 point here, that means that it's confirmed that a new upcycle being formed. For now, you can see here momentum start to pick up, and the resistance or the momentum is not strong enough yet. RSI appear to just breaking above short-term moving average over here, but it's still way off of the bigger time frame over here. So I think you need for more stronger concrete momentum, particularly you need to take out this level 90 cent for the stock turn bullish, at least short term. For those who are actually looking for the short term trade, I think one thing you can do, you can go on a smaller time frame. If you go small time frame, momentum here look a bit strong, but the candle here not so much. So because of that, I think the stock, despite creating a new high structure, looking quite in terms of attractiveness, I think there's a plenty other stock who actually could doing much more better. So just quick look on the different setup over here. You can see here it just broken the 200-day moving average and retest the level again. That means a failure to break 200-day moving average over here could send the stock back on the sideways or continue the current correction. So that's for Samcheck.
All right, thank you so much, Nick. There seems to be a few questions on DNO.
DNO. Okay, on some chat I saw 5 stock that can work for this week. I think because my role as a chartist here, I producing some what we call that a stock pick on daily basis. Of course, when the market, even when the market is bad, very terrible, I have to look for the idea as well. So that means the reading, so the recommendation for those particular day is based on what best available on that particular day. Now for DNO is actually the stock that we are recommending today. We are recommending at the price, I think at 369 accumulation with the support below 340 and slightly below, I think slightly below. And we expect at least DNO the stock testing the upper resistance at 389 and 425. So 425 is 2 key support, 2 key resistance level that we are looking at. So DNO is actually our buy call today. Upper target at 425, at least 425. 425, I think right within 61.8 moving average. 61.8 Fibonacci and also slightly above 50-day moving average. So that's our short-term target for DNO.
All right, thank you so much, Nick. How about Charimin?
Charimin. So okay, so this is interesting because oil doing quite well. Some of the oil and gas stock doing quite well. Even Sapura Energy also goes up today. And but the Chinese reaction has been quite muted. And if you can take a look here, the structure, I would say is pretty much on the sideway, right? And it has been on the sideway for quite some time. Not sure what happened in their fundamental. So it has been for sideway for 2 years, whereas some of the you know Chinese stock has been trading higher and creating a new high structure, uptrend and so on. So I would say the upside for the sharing could be kept. Even I draw a simple Fibonacci over here, you can tell there's a plenty of the rejection occur within 50% over here. And as per today's candle, again, this candle not complete, you can see there's a plenty resistance coming in. Now, if you use as if you saw on the left side of the screen, there's a kind of like volume over here. This is a volume profile, whereas you can use overlay on the chart and use that to combine to look whether the support or resistance zone are strong or not. So in that sense, you can see here, there's a big chunk of the, volume profile have been trading within 775 up toward 825 cents. So that means this level is considered a very, very strong resistance level. So because of that, I think the stock could have a trouble to take out this kind of resistance, 50 cents, unless there are big surge of trading volume coming in, often coming with a catalyst to break the stock beyond this level. If not, then I would say it's most likely to trade, continue to be on the sideways basis.
All right. Looks like there are more questions than we can take. Maybe you can share with us, what are top 5 stocks that we should put in the watch list in this week?
All right. Okay. The stock, I think maybe we can just take a look certain stock. You can use simple strainer, to have the stock. So for now, I think hibiscus could lead the way. Momentum is there. Create a gap up. If volume also equally high today, if the stock can sustain the current momentum, I think we should see further upside move. Patron, I think little bit earlier I saw a topic reading, but today a gap up here has could trade much more higher. But Patron is not in our radar. Okay, power starting to rebound, not much. I think this one, but this one too high already for entry short term. We've been highlighting in our research report last week when the result come out, which is quite good. We in fact upgrade, I think, the upper target for the fundamental as well. DNet, I think one of the stock you may want to relook at. Outcome is our stock recommended today. We recommend in our Chartist today. The reason why we recommend it, because one, it has been trading on the sideways for quite some time and it just start to test the upper resistance over here. So if today's candle can sustain with a slightly higher volume, then I think there's a decent chance for the outcome to continue to trade higher. Penta too strong last week, so I would say I want to highlight the stock for today's buy, but because of the risk, this kind of too big, 14% up, I think it is beyond the normal 10% risk, so that the reason why we did not immediately highlight it. QES also look like appear to be about to break the recent, what we call that 200-day moving average. And in fact, this stock we have been recommending for quite some time. Granted, it has not break the resistance yet, but I think once trading volume, you can see start to increase. If they're able to break beyond 200-day moving average over here, I think that could be further upside. So how many stock there? Just now 4, right? So one more.
Yeah.
Let's take a look. What stock that may look okay. I think another stock would be this one, but we have been recommending also a stock, Micron. I think this candle earlier last week, and we recommended again today. So is there any pullback, toward because we highlight there is a pattern. So the breakout is common, often followed by the pullback, and this pullback rebound for the current pattern neckline over here could actually prolong the upper trend movement. So we think Macron also right for further upside movement. So let me take a look. What has the stock look quite promising? I think most of the stock that we're going to highlight in our trading report, which you can access it to the Maybank Telegram channel. we put a snapshot of our summary stock, and beyond that, for the full report, you have to be a client, and the client can access to the Maybank trading apps. I think that will be all. Don't worry. I think if you want to know ask about stock, the technical outlook for your stock, you can always there is always our session. I think every Tuesday we're going to keep it open, and we're going to highlight if there any particular event for in our Telegram channel. Just one last Shane, sorry, quick last
Yes.
one. There's some question. What is your criteria for the filter as a screener? So let me just share you for free. Nothing. If you can take a look here, I just give you some simple tip. There's no what we call that fancy, because when we screen the stock, the idea is for us to reduce the number of the stock that we're going to go through, not to the point that we're going to miss out all the stock still pretty much in trading uptrend, but have so-called some short-term correction. That means your screener cannot be too rigid. I mean, if you're too rigid, you can miss out a lot of the good stock, which is actually trading in the consolidation pattern. So often this is simple screener. You put market cap above 100 million, volume above 5K, last traded volume above 20 cents, trading above 20-day moving average and 50-day moving average, and of course the earning per share at least 1 cent. That means the stock which is at least net income which is positive. All right. So this is simple. So when I have this simple tool, from 980 stock, it become 93 stock, and much more easier for me to go through. So this is one of the few screening that I have. I have quite a number of screening that on TradingView. I still have on my MetaStock and different other software. All right. Thank you for your question.
All right. Thank you so much, Nik, for sharing with us your screening criteria, and thank you so much for the rapid summary of the technical outlook for the US market, from the Asian market, as well as the Bursa Malaysia market. And also appreciate that you zoom into each sector to let us know what is the outlook like. And also thank you for doing the technical review of the stocks that we have participants have asked in the Q&A box. I know that there are some of you here, many of you here, whose questions haven't been answered yet, but don't worry, you can head over to the Telegram channel, where the Telegram, you can download the daily research report by the Maybank Telegram, inside the Maybank Telegram channel. So that's where you can get trading ideas on what you can trade on the daily basis. All right. So the Amirul Afif from Maybank have already shared the link there in the chat box. That's where you can head over to join the Maybank Investment Bank's Telegram channel to get trading ideas. With that, so ladies and gentlemen, you just heard from the senior chartist of Maybank Investment Bank, Mr. Nik Ihsan Raja Abdullah. Hope you enjoyed the session. So for more information, you may tune in. You may watch out from the more events from Bursa Marketplace, or on our Bursa Marketplace. We share with you a lot of events, and some of you here ask about QES. Next month, we'll be hosting the management of QES on this Progress with Opportunities webinar series. So with that, thank you everybody. May you have an enjoyable rest of the day. Bye bye.
Thank you, Shane. Thank you,
Thank you, Nik.
Thank you, everyone.